name is Ebony with the Bates International Group, and we got some of our team on there. Mohammed, you want to say hello? Introduce yourself.
Hey, good to see everybody. Welcome.
Awesome. Hey, and Dinesh, I see you're on there too. You want to say hello?
Hey, hello, everybody. Nice to be here again. Thank you so much, Ebony. I always enjoy this talk.
Of course. So we'll go ahead and jump right off. We meet the first Thursday of every single month. So we'll be back here, next month, same time, same link. So, definitely feel free to join us. We're going to be talking about insurance this month. And, so we feel really, really lucky to have our guest on to speak about that. We have Oropeza Insurance Agency on here, and we're lucky to have the president and the owner and CEO of the company to talk to us today about insurance. So before I hand it over to Alexander and Sarah to introduce themselves, I just wanted to make sure, Mohammed, do you have anything that you want to impart on our guests or any, rules of engagement?
Very simple. We keep both fighters to their separate corners until it's time to come out in the middle. Then we, touch gloves and we come out fighting. But no, all seriousness, we tend to, give our speakers an opportunity to present before asking questions, and we open it up for open discussion. If you have questions in the interim, put them in the chat. And we can make sure that we get to all the questions in the following dialogue. But very simple. We tend to keep this to 30 minutes. We try to be mindful of everyone's time. We appreciate that you're here, and we want to maximize the time that we have. So with that, I'm going to turn it back over to Ebony and to our presenters.
Yes, thank you. So just check us out. We're the Bates International Group, info@thebatesinternationalgroup.com. If you've got questions, we'll leave that information in the chat. This is recorded. So without further ado, Alexander, we would love for you to, introduce yourself, your company, and just tell us a little bit about what you and Sarah do and how it relates to real estate, so we can definitely refer business and call you up.
Okay, thank you. Thank you, Ebony, for having me on, and thank you, Mohammed. My name is Alexander, and I have an insurance agency in Northern Virginia, and we are an independent insurance agency, and we sell business insurance, home insurance, auto insurance, property insurance, all kinds of property insurance through multiple carriers. And we've been in business 3 years, and I've been in the business 20 years. My business partner, Sarah, is here with me as well, and we've known each other for a long time. And we're from the area, and I know you, Ebony, for a long time. And insurance is, I'm here to say that insurance is fun and sexy. No, I'm just kidding.
Very sexy.
And how real quick, how it relates to real estate is, well, it is required by every lender to have, and it's probably necessary even if you don't have it, to protect your assets. If you pay cash for a property, you still need property insurance, or certain lifestyle, different types of properties. So, hey, Sarah.
Hey, so I'm Sarah. I have, like Alexander said, I've been working in the insurance industry for a while, and we've known each other for a while. So as it comes to, or as it relates to insurance, in this area, there are very high valued homes. I'm sure you guys are very well aware of it. You guys are realtors, so it's super important that clients definitely, or whoever's purchasing these homes, protect their assets. It's a very, very valuable thing, and in the DC metro region. So love to share a few sort of myths. We want to debunk a few myths that relates to the insurance world when it comes to homeowners insurance. We can talk a little bit more about that. So yeah.
Yeah, are you gonna ask us questions or should we?
Or,
just
yeah.
I think we can probably just jump right in if you've got some tidbits to share. And,
Okay.
I have a couple of questions, or at least, that came from clients who weren't able to join tonight, but
Okay.
definitely, we always tend to find time, even though it's only a half hour. So please go ahead and, if folks have questions, they can either raise their hand or speak up, so it's all yours. The floor is yours.
Okay.
I do have one thing. I would love for you to chime in on some of those insurance myths, because there are a lot of myths that permeate every industry. So if you want a good starting point, definitely start there.
Yes.
And I would love to hear, like, if you have time for, anything that we like, bad words, for example, or things that maybe if you say to an insurance agent, these are words that, are going to raise some red flags. Now, I know that but we love to give our clients the best information so that they can leverage things. Like, for example, I said, water got into my house is what I should have said, but I said, there's a flood. And they're like, right. So I just used the wrong word. So anyway, so myths and maybe things, what not to say, and then we can, see how much time we have.
Okay.
I have a quick question for you guys. So you're based in Northern Virginia, but does that mean, but you guys cover the entire DMV, I'm assuming? Like where do you guys cover?
Yeah, actually we are licensed in 16 states.
Okay.
And that's just because we had licenses before we started the company from our last job, and some of our clients have stayed with us, but we do Pennsylvania, Delaware, Maryland, Virginia, DC, North Carolina, South Carolina, West Virginia.
Awesome, because I have I'm coming from a situation where I've done business in like all 50 states.
Yeah.
I'm currently licensed in 4, but I can I can be licensed in more states. So in other words, I can recommend you guys in states outside the DMV. So it's good to know that you do business outside of that area.
I can send you a list, and we also have referral partners. So there's a good a team back and forth.
Sure. I'd love to see what all the states you're licensed in and where your partners are. So I appreciate that. Thank you.
The first, I think, myth that I wanted to talk about as relates to kind of real estate, and this is kind of popular, is a lot of homeowners and lenders think that the property insurance amount should be the sales price, and that is not true. And if your property insurance amount is your sales price, you are overinsured, because insurance doesn't cover the land value or the sales market value. It only covers the structure. So, and that's the easy, like the tax, if you see the tax records, they show that there's a building amount and a land amount. You see an appraisal, there's a structure amount and a land amount and a market value. But the insurance value of your property, of your home insurance, your condo, your townhouse, and your home insurance is just the structural amount. Does that resonate?
So so you're referring to the replacement cost. I'm right.
Correct.
Right.
Yeah.
I mean, that's what I'm familiar with insurance, that it's based on the replacement cost, not the market value.
Correct.
And the replacement cost, like on a purchase, typically it's we rely on the appraisal to tell us what the replacement cost is.
Right. But a lot of lenders, and especially with condo insurance, don't understand that. And condo insurance has a master insurance policy, not just for the individual unit of the co-op or the condo. So that's an important fact for other people to realize, is that it's not to value. I mean, it's not the market value.
Market value.
is it a myth, or is it, or should people, like, because we had a really hot market, let's say you bought 10 years ago, we had a really hot market, shouldn't people then go and reinsure for a higher amount to account for that, or is that also a myth?
No, so every year, every insurance company, I'm sure you notice that every year your insurance goes up. It goes up to adjust for inflation, to adjust for the area. Property in DC is more expensive because of the labor costs or the supply than it is in Virginia, for example. And then Northern Virginia is more expensive than, say, Southern Virginia. So every year the policies adjust for inflation of the structure, not the sales value. So it'll never go up 20%, 60% like the market, or it won't go down that way. It'll still cost $250K in Gainesville, Virginia to build a 2,000 square foot townhome. Does that make sense?
So
it does make.
Yeah, like each year the policy has an inflation guard. So each year the dwelling limit increases 3 to 5%. So you're still keeping up with the increased cost of construction. So the value of the home is still going up in terms of the coverage.
Because I was of I believe the myth that, it needed to be, if property values went up 20%, then we should be looking to increase our insurance to kind of track with that. And it sounds like we should be checking in with the insurance agent to just make sure that it has been adjusted for the inflation, not that it meets the actual, like you said, market value.
Right. You can check with your agent, but most likely it's written with the correct amount. Otherwise, the lender would not have closed, or the lender sends you a letter every year saying it's below market, or that they're the ones that check in with you and the insurance companies as well, because it's in their best interest to keep the property insured to value. They'll never say it's overinsured though. They'll just say it's probably underinsured.
So question, what happens when there's such an explosive growth in the market like what we've had over the last 2 to 3 years? So I'm actually in Houston right now, and housing prices in Houston have pretty much doubled over the last couple of years. So a house that was originally selling for $150,000 to $200,000, $250,000 at max, right now is selling for between $400,000 and $500,000, depending on where the neighborhood is. And the cost to build has gotten significantly more expensive due to the pandemic, supply chain issues, inflation, interest rates hikes, the bond market, like you name it. So the cost to build from the ground up here used to be $100 a square foot to build. Now the cost to build is $200 a square foot. That's a significant rise in a very, very short period of time. Do you ever find yourself in a position, or does the homeowner ever find themselves in a position where there's a gap, something happens and there's a gap between what is required, is what needed to rebuild the house exactly the way it was, and what the insurance company is willing to pay as a result of these market conditions?
I've never seen a claim that was underinsured in 20 years with my clients. But what I understand you're saying, when the policy is first written, and let's say it was written in your example, 150,000, the dwelling was 150,000, and now the dwelling is worth 250,000. Usually, the policies have something called most policies have this automatically. It's called extended replacement cost, which gives you 25 to 50% above and beyond the dwelling limit. Separately, the policies, the insurance companies have software, which is why they send you letters that says it's underinsured based on the current market, et cetera. You're underinsured by 70,000, by 100,000. The insurance companies, it's in their best interest as well to insure to value, at least not underinsure it, because then then there's a whole claims issue on why it wasn't insured properly. But the starkness of that jump from one year to the next, it's like, I don't see that as a problem. I think that maybe the costs went up 25, 50%, 100%, but the structure itself is what we're insuring.
The
Not
the replacement cost itself, even though the market value went up X amount, it probably didn't go up significantly, but even if it did, there's still that 25 to 50% cushion that Christian was saying, that there's an extended replacement cost. So you get that cushion in the event that it did jump up.
Gotcha, and that's good to know, because prices here, the cost to build, just the material cost alone, has just gotten really, really out of hand, and that definitely impacts the replacement cost when you're going to rebuild. I know I was doing a job in New York. This was a couple of years ago, and this was during the pandemic, and the cost for the renovation was going up literally every week because the cost of wood,
the wood. Yeah. Yeah, I finished I got my basement finished during the whole COVID wood shortage. And
$60 for a sheet of plywood.
Yeah, I know. What was supposed to be, it was like, I understand. So
another question that I have been, I've been fortunate in my dealings with insurance companies over the years, mostly. What are some of the things that clients should be aware of when they're talking with the insurance company if there's a repair that's needed? I know one of the notorious things that I remind my clients not to say is flood, because flood falls underneath federal insurance, and if there's water in a house, never say
or
flood.
Is that a myth? Or is or is this one of the myths that we need to debunk?
Well, I think it might be one of the myths that we need to debunk. So everyone thinks, okay, well, water damage is covered, so all types of water damage are covered on my policy. So, and that's false. So the standard homeowners insurance policy does not cover flood. Usually you have to get a standalone policy, and you can get that through FEMA, NFIP, et cetera. Things like sudden and accidental water damages are covered. So let's say there's a burst pipe in your home.
Sarah, I want to stop and make a point. Did everybody hear that? Write it down. What did you say? Sudden
and accidental.
Sudden and accidental. Okay.
It's very important, yes, because anything that's continuous or long-term, like a leaky pipe for 2 months, that's not going to be covered, because that's the purpose of the insurance is for sudden and accidental things. So when you have any sort of a flooding caused by water backup, sump pump, those things are not covered, and you want to, but there are endorsements that you can include on your policy to get it covered. There's, and those endorsements are called water and sewer backup. So in case any water overflows from a toilet, sink, anything like that, the damages of that, as long as you have a sewer and drain backup coverage listed on your policy, the damages as a result of that would be covered. A flood is not covered on a standard homeowner policy.
To piggyback off you, Sarah, if a client has a claim and they call the insurance company and say it's a flood, the insurance company doesn't say, oh, it's a flood, it's not covered. Like, they don't take their word. They don't take their word for it. So they can use whatever language they want to use, whether they say flood or water or sewer. The insurance company is the one that's going to say it's a flood, or it wasn't a flood. It was a water backup, or it was a pipe break, etc. So I wouldn't worry about the language I use when reporting a claim.
Yeah, I think to piggyback off of Christian, and sorry, Ebony, I would say if you did notice something leaking, to report it immediately, because if you let it linger and a month or two passes by and then something catastrophic happens, they're gonna be like, well, how long have you known about this? And then now it's no longer sudden and accidental. Now it's been there for quite some time. So
to just elaborate on this a little bit, something that is sudden and accidental, does that mean that if there is rain that day that it can no longer be sudden and accidental? Or like what constitutes of a sudden and accidental water incident? And if water comes from the outside into the house, is that something that can be covered? Or is it, if it comes in from outside, it can't be covered?
no, it can be covered. It's basically, it's something that's unexpected. So you weren't aware of it. So flooding can occur, maybe some rain can, like one night of rain, and there might be some flooding, maybe 4 inches or something like that, that now seeps in through the home. There are service line endorsements and other types of water damage related endorsements that you can include on your homeowner's insurance policy to cover those things, like if there is 4 inches of rain on your roof, etc. But if you've noticed it and you hadn't taken care of it, and then a few months later something happens, it's kind of considered a maintenance issue. You didn't maintain the home, and now you're negligent, and the insurance companies are not gonna cover it, because it would have cost less had you reported it 2 months ago.
Got it. So how would force majeure, like kind of an act of God, factor into your insurance coverage and the different riders that you need in the coverage to be protected? And right now, I'm highlighting that because of all the changes that we're having in our weather patterns, and the 1,000-year storm is now becoming more like the 10-year storm. And what used to be a 100-year floodplain, we're seeing flood annually. So what does that look like as far as being prepared from an insurance perspective?
Well, I wanted to address Ebony's thing versus related to your, when we're talking about how insurance coverage applies, it's an insurance contract, and there are thousands of things that could be covered and not be covered depending on the specific claim. Like, for example, fire is covered, but if you don't have earthquake coverage and an earthquake causes the fire, then it's not covered. So there's just like so many, we can go down the rabbit hole, a billion. Yeah. In a nutshell, a policy language reads, when you're talking about nature, so reads X, everything is covered unless it's excluded. So what they exclude are like flood, earthquake. If in this area, in Florida, they exclude wind and hail, you have to add that back. So in this area right now, for the storms, we're fine with it. No one needs to worry about different deductibles or anything like that. They just need to make sure that they have the right insurance amount for their structure. And then
It's interesting that you say earthquake. So this was, I want to say, sometime between 2007 and 2009. I don't know if you guys remember, we had an earthquake here in DC area. So anybody who had damage to their home as a result of that earthquake, they were kind of SOL because they didn't have earthquake coverage, because we don't typically have earthquakes here.
What was your question?
I think he was saying if their policy didn't include earthquake coverage, then they weren't covered. And yes, if they didn't have earthquake coverage, then they're not getting their homes repaired by the insurance company. They're paying out of pocket.
Even though it was unexpected, and we don't typically have earthquakes in this region, but we did have one, it was like 10, 15 years ago. Like nobody expected it.
Your policies exclude, when you read the policy, you have a base policy form. So every insurance company has a base policy form, most of which are approved by the states that they're issued in. That base policy form outlines what is covered and what is excluded. So in that base policy form, it says we cover everything except these things that we exclude, which are flood, earthquake,
war, terrorism, nuclear,
like
bombs, like kind of crazy catastrophic things. They're usually excluded from the policy form. Crime, war,
because
damages.
they want you to buy it back, and they want to charge for it. So
Okay.
the people that didn't get earthquake, they can get it now, but if you don't have it, the insurance company doesn't automatically include earthquake and flood.
Right. So if you don't have it at the time of loss, then it's not covered.
So two questions for you before I basically shut up for a minute. One, what would be your recommendation to your clients as far as what coverages they should include and what coverages they should think about including just to be on the safe side? And also, on a monthly basis, on average, what should customers be thinking about paying, monthly or annually for their homeowners insurance?
So which one do you want to
Okay,
answer?
that's a twofold question. Okay, Alexander, do you want to do one and then I'll do two?
Okay. What the one was
What should be included that
What?
normally isn't, like something that is normally in
Okay.
the excluded
Okay,
list that should
or-
be included that you would suggest.
Actually, Alexander, don't hate me. I'm gonna take over one.
Okay,
And then you
okay.
can do two.
Okay, I'll do two.
Okay, so most people, when they think of homeowners insurance, they usually think everything that's in my house is covered. And that's not always the case.
That's correct.
So usually the dwelling structure is covered. And then you have your property, personal property or contents, which is your furniture, appliances, TVs, things like that. Those things are covered. But if you have a $20,000 wedding ring, or you have a, $10,000 Rolex, those things are not going to be covered. You usually get sub-limits on the policy for things like jewelry, fine arts, fur, money. So if you know, or the questions that you would want to ask, or we would ask our clients are, do you have any sort of prized possessions? Do you have anything of high value? Because if so, those items need to be scheduled on the actual policy itself and be included so that the actual value of that property is covered in addition to your regular, furniture and appliances, et cetera, and things like that. Because if you have a small sublimit on your policy for jewelry and there's a fire, the ring burns, whatever happens to it, it gets damaged, in that loss, and you only have $2,000 worth of jewelry coverage, they're only going to give you $2,000 even though it was valued at $20,000. So it's important to identify what prized possessions or what high value items you have so that those can be included on the policy, because not everything is included.
Gotcha.
And then I'll let Christian take two.
Okay, that was you were saying what on average should a customer be paying for home insurance, basically? It
Correct.
really depends, which is kind of related to my one of my other myths. But it depends, one, on what you're actually insuring, where you're insuring it.
Mm-hmm.
And then it also largely depends on the homeowner's credit. Personal insurance takes into consideration credit. That's how the companies decide certain rates, which kind of goes into my myth a little bit, where it also depends on your claims history. And so there's no average. I mean, if you had a perfect, I guess a $350,000 home in Northern Virginia, which is, there's no 350, so let's say $500,000 home. Let's say everything's great, like $1,400 a year. Some people pay $900, some people pay $2,500. Especially now that because of the prices are going up, the premiums are going up, and in property as a whole, it's like spiking. But regarding the claims, people don't realize that claims, it's like a catch-22. Insurance is there, but it's like catastrophic. They don't want you to make $1,000 claim, $2,000-$3,000 claims. One $200,000 claim or one $70,000 claim is much better than three $1,000 claims. It's just the data shows that people who make small claims will make larger claims, and insurance companies don't want to insure that. So then they raise your rates or they remove certain discounts. So then your premium goes up. So by making more claims, you're actually hurting yourself for the next 3 to 5 years incrementally.
Christian, I have a question from the audience. This is someone who they have a mobile home in Rehoboth Beach, and they want to know, do you insure mobile homes? And I don't know if Delaware is one of your states. And do you insure water homes? They didn't say they have a water home. They said it's a mobile home, but let's say it's by the water. Do you that's a twofold question. Would you be able to cover them?
Yeah, I mean, yes, there are markets that do mobile homes and there are markets that do homes by the water.
Okay, so we'll make sure that we put you in touch. I want to make sure there are no questions in the audience because we're at 6:30, believe it or not.
What?
Yeah. So
Goes quick.
Yeah, I know. So yeah, are there any questions? You can just feel free to unmute yourself. We'll just give you about 30 seconds and then we'll assume there are no questions. Okay, hearing none. Hearing none.
Reach out anytime.
Yeah, this was fantastic. If you want to leave your information verbally, you can do that, but we'll also leave it in the video. But for the folks who are on here, do you want to leave any info?
I mean, I can put in my email address. So
Okay.
anybody who wants to reach out, and my phone number as well. If you want to reach out, have any further questions on home or other insurance related questions, feel free to give me a call or shoot me an email.
That's right. And this is Oropeza Insurance Agency, and that's OROPEZA Insurance Agency. And we thank you, Alexander. Thank you, Sarah, for sharing.
Thank you, guys.
Thank you.
Thursday evening with us, and we'll be back next month, same time, 6 p.m. to 6:30. And we'll definitely be looking to have you guys back because I know that there are a lot more questions, and we definitely want to dig deeper. So thank you, and we'll see you guys next month if you are able to join.